It is the last day of July in 2023. My name is David Hickson, and in today's market update, we're going to be taking a look at the S&P 500 using data from the SPX. We're going to be discussing identifying troughs in a rising market, and we're also going to take a look at a few FLDs and discuss the new approach to the FLD that I mentioned in last week's market update. So here is the S&P 500, SPX data, as I've already mentioned, and this is the analysis we've been looking at for some time. We had the important trough in October of last year, which initially we were able to identify as a trough of at least 18-month magnitude. However, as time has passed, and as I discussed in a recent market update for the S&P 500, it now seems very likely that this was a trough of 54-month magnitude. I'm going to speak a little bit in today's video about the positioning of those longer cycle troughs. I've often mentioned that longer cycle troughs, in my opinion, are not worthy of too much focus, and I'm going to spend a little bit of time explaining why I say that. It is not that they are not important, but I think we can get distracted by spending too much time debating exactly what magnitude a particular cycle trough is. The important thing is to focus on the minimum magnitude in terms of making trading decisions. And in my opinion, the minimum magnitude of that October trough is 54 months, which is a pretty impressive cycle trough, 4.5 years. And so it is not entirely unexpected that we have seen such a big bounce out of that cycle trough. But let's speak for a moment about that big bounce. As you can see, we had a very good, clean M shape, and cycles, of course, create M shapes in financial markets. If you don't understand why that is, I would encourage you to download the 10 core concepts of Hurst cycles document that you will find a link to in the description below this video. So we witnessed a very clean M shape for the first 20-week cycle. There is that 20-week cycle trough in March of this year. And since then, we've seen a constantly accelerating move upwards. So where is the M shape for the next 20-week cycle? Now, I discussed this in my previous market update video, so I'm not going to dwell on it here. Suffice to say that following a very big magnitude cycle trough, we do often see a fairly muted bounce out of that trough, followed by a much stronger advance. As mentioned in the previous update in which I discussed this, I don't know what the reason is for that, but it is something that I have often observed. Now, in this analysis, you will notice that the 40-week cycle trough has been positioned over here in the second week of July, and you can see the pin symbol, which reminds me that I have influenced this analysis to position the 40-week cycle trough over there. And why have I done that? Because you can see that the trough in price was a very insignificant little trough. Surely that could not have been the trough of the 40-week cycle. This is where identifying price troughs in a rising market becomes interesting. Well, I describe it as interesting. I could also describe it as tricky, because it is very tricky identifying cycle trough positions in a rising market. So let's quickly revise the reasons why I think that is a 40-week cycle trough. The first thing is that when we measure the number of days that have elapsed from this trough in the middle of October to this price trough position over here, you can see that it was a number of 270 days. The average length of the 40-week cycle discovered by Hurst 50 years ago was 272 days. So when a potential price trough forms 2 days before the average wavelength, and that average was discovered such a long time ago, and it has been beating with some regularity for 50 years, when that happens, I tend to pay attention and say that this is a likely position for that 40-week cycle trough. Of course, we do not analyze our cycle positions purely on the basis of counting the bars. A Hurst cycles analysis is a complex puzzle involving multiple cycles. So we look at the next shorter cycle. We have an obvious position for the 20-week cycle trough over here. This was a late 20-week cycle at about 150 days following that trough in October. If we measure the number of bars following that 20-week cycle trough, you can see that the 20-week cycle trough then came in early at 119 days. That will, of course, often happen. Following a long 20-week cycle of 150 days, we will experience a shorter 20-week cycle of 119 days. There is another discussion to be had about the way in which the average wavelength of a cycle is achieved. Do we witness alternating longer and then shorter cycles, or will we, following a longer cycle, expect another longer cycle? That's a discussion for a separate time. Nevertheless, I think that the trough over here in the second week of July is a very reasonable position for the 40-week cycle. But let me zoom in and explain some other reasons why I think it is very likely that the 40-week cycle trough has formed. One of the dangers of being a cycle analyst is that we expect, of course, the cycles to influence price to rise, and then we expect cycles to influence price to fall. I describe that as a danger because the tendency is for us to say, well, a peak must form and then the market is going to fall. However, it's important to bear in mind the underlying trend. If the trough that formed in October of last year is a trough of 54-month magnitude, as I believe it is, then we have some pretty big, strong cycles influencing price to move up. What do those cycles do to the shorter cycles? What they tend to do is they cause late peaks to form in the cycles, and they tend to suppress the downward movement into the cycle trough. If this 40-week cycle trough did form in the second week of July, as I believe it did, then that 40-week cycle peak was very late in the cycle. You can see if we measure the number of days, we don't actually need to count them, but it's fairly obvious that that peak occurred late because the amount of downward movement was a very short period of only about a week or a week and a half. And so we have a very late peak that is simply a sign of a bullish market. The tendency for people new to cycles analysis is to assume that this is the move up for the cycle, and then we are going to experience a move down of equal proportion. And that is wrong because of the underlying trend. In other words, the bullish pressure of those longer cycles, the move down will be very much suppressed by that bullishness of the longer cycles. And so this is, in my opinion, a very good position for the 40-week cycle trough. Now let's move on to another reason that I believe this is indeed the 40-week cycle trough, and that has to do with my favorite tool discovered by Hurst, the FLD, or future line of demarcation. Let's display the FLD for the 20-day cycle. I often discuss the sequence of interactions that happen between price and the 20-day FLD. Of course, this sequence of interactions occurs between price and every FLD that we can display on our charts, but the 20-day FLD is a very useful one to refer to in these videos because of the time frame that I'm generally speaking about in these videos, and also the 20-day cycle proves to be a fairly reliable one. Now, if we make the assumption that this was indeed the 40-week cycle trough, then the first interaction that we would witness between price and the 20-day FLD following that price trough would be where price crosses above the FLD, which indeed it did over here, and we would label that an A category interaction. That would then generate a target. That generated a target of 45.20, I believe, if memory serves me correctly, and that target was, of course, reached over here on Friday of 2 weeks ago. What is the next interaction that we expect to experience between price and the FLD? The next interaction is the B and C category interaction pair. I refer to them as a pair because they do often occur as a pair. The B part of that pair is where price finds support at the level of the FLD. That is our expectation if this was a trough of 40-week magnitude. We would expect price to find support at the level of the 20-day FLD at the time that the 20-day cycle forms a trough in the markets. So here is our nest of lows for the 20-day cycle trough. It was focused on last week on the 26th or 27th of July, and at that time we would expect a 20-day cycle trough to form. And when that 20-day cycle trough forms, we would expect price to find support at the level of the FLD. That is indeed exactly what happened. And in case you think that we are painting this FLD with the benefit of hindsight, I should remind you that the FLD is plotted into the future by half the cycle wavelength. And so we do already have an FLD for the 20-day cycle plotted just over a week into the future. And so this sequence of interactions between price and the 20-day FLD supports the hypothesis that the 40-week cycle trough has formed in this market. Because that price trough occurred only 2 days early, according to the average wavelength of the 40-week cycle calculated such a long time ago, the evidence seems very strong, in my opinion, that the 40-week cycle trough has formed. So what are we expecting next? Well, if we zoom out, we can see the next cycle troughs that are expected in this analysis. We have a 40-day cycle trough expected towards the end of next week, and here is our 80-day cycle trough expected in about the middle of September. Now, bearing in mind what I have already said about the dangers of being a cycle analyst and expecting that the 40-day cycle trough is going to provide us with a mirror reflection of that upward move, we are not expecting price to come all the way down to the starting point, and nor are we expecting price to come even further down for the 80-day cycle. What are we expecting? Again, we can take a look at our FLD. Let's display the FLD for the 40-day cycle. Here it is. And I would like to remind you of the new approach that I mentioned in last week's video in terms of these FLDs. The FLD is a very powerful tool. Often we spend so much time worrying about the analysis that we forget to focus on what the FLD is actually telling us. What I would like to suggest this 40-day FLD is telling us is that the 40-day FLD is a dynamic level of support. If our analysis at the foot of the chart is correct, and let's assume for the moment that it is, then this 40-day cycle trough would be expected to form towards the end of next week and at about the level of the 40-day cycle FLD. And so this blue line, this 40-day cycle FLD, is in fact a dynamic. In other words, it moves on each and every bar, or it's at a different level for each and every bar. It doesn't move, of course. It is simply the median price displaced into the future. And so it provides us with a dynamic support level. Just as last week, the 20-day FLD provided us with a dynamic support level for last week for the formation of the 20-day cycle trough. And so if we have a support level over here, we would expect price to probably keep rising and form an even later peak for the 40-day cycle, because it is now, of course, bouncing out of a 20-day cycle trough, and then it will come down and form a 40-day cycle trough, and it should find support at about the level of that FLD. Let's add the 80-day FLD into the mix, and the 80-day cycle trough is expected over here in the middle of September. Is the 80-day cycle FLD going to provide us with another level of support, or is it going to provide us with what we are calling an acceleration point? In other words, a point at which the market is going to accelerate downwards and create a target to the downside for the 80-day cycle trough. I'm sure that you know the answer to that question. If this trough over here was of 40-week magnitude, as I believe it was, then we would expect the 80-day cycle FLD to provide support at about the time at which the 80-day cycle trough is going to form. Now, you can see that the 80-day cycle FLD does not in fact extend that far yet, but as we approach that time, we will be able to determine an appropriate level at which that FLD will sit and therefore provide support for the formation of the 80-day cycle trough. I thought it would be interesting in today's video to take a step back and take a look at a much longer FLD. I have changed the time frame on this chart to a monthly time frame, and this is an 18-month cycle FLD. You can see that median price crossed above this 18-month cycle FLD over here. I think that happened during the month of February of this year, thereby generating a target. Now, the target that was generated, interestingly enough, is 4,600, and that target has indeed just been achieved. Now, when a target has been achieved, that does not mean that the market is going to instantly turn around, but it does indicate that the momentum provided by the 18-month cycle has reached its fulfillment. In other words, it's achieved its maximum potential, and the market could keep going up, particularly because of the fact that we probably still have a 54-month cycle pushing upwards, but the 18-month cycle has done its work, and it has achieved its peak. Now for the interesting question, what are we expecting in terms of the longer term picture? Here is the next trough for the 18-month cycle. You can see it is expected early next year, February or March of next year. And here is the 18-month cycle FLD, already providing us with a level. Now, in terms of our new approach to understanding the way in which the FLD interacts with price, it's not a new understanding, I should point out, of how the FLD interacts with price. We have been using this approach for many years now, but it is a simplified way of understanding it in terms of the FLD either provides support at this point, or it will provide us with an acceleration point to the downside. Now, this is where the longer cycle troughs come into play. I mentioned earlier I would be speaking about these longer cycle troughs. And so if the trough that formed in October of last year was of 54-month magnitude, as is indicated in this analysis on the chart, my question is, what is going to happen when price meets the 18-month FLD? You probably know, because I have spent a great deal of time in these market update videos explaining the sequence of interactions. You probably know that if the trough in October of last year was of 54-month magnitude, then we would expect this FLD to provide us with an acceleration point as price comes down into the next 18-month cycle trough. In other words, we would expect price to cross below the 18-month cycle FLD at some point. We don't yet know at what point, but it will then generate a target to the downside, just as the crossing above the FLD provided a target to the upside. However, before we start planning our short trades in the early part of 2024, I should point out that that reasoning is based on the idea that this is indeed a 54-month cycle trough. Surely it is. I've spent some time already explaining the fact that that is a 54-month cycle trough. But we do need to ask ourselves, is it possible that that is a longer cycle trough? This brings me back to the point I made earlier about debating the longer cycle trough positions. So we're going to spend a few minutes doing exactly that. First of all, let me point out that if this is a longer cycle trough, I'm not saying it is, but if it is a longer cycle trough, then how would that change our understanding of what is expected to happen when price does meet this 18-month cycle FLD as it is destined to do? I'm sure you know the answer to that. If this is a longer cycle trough, then the FLD will not provide us with an acceleration point. It will instead provide us with a level of support. And further to that, we can say with some confidence that at the time at which the next 18-month cycle trough is expected to form, February or March next year, this 18-month cycle FLD will be providing support, and it is likely that the market will find support at the time of the next 18-month cycle trough at about the level of that 18-month FLD. But that argument is all based on the possibility that this could be a longer cycle trough. So let's discuss these longer cycle troughs. Now I have zoomed all the way out, and let's really consider these longer cycle troughs, in other words, in this case, the 9-year cycle trough. Here you can see we have some fairly well and fairly obviously positioned 9-year cycle troughs in early 2009, for instance, following the financial crisis of 2008. That financial crisis brought price all the way down over here. Then price bounced out of a fairly prominent trough, which has been phased as a 9-year cycle trough, according to this analysis. The next 9-year cycle trough, according to this analysis, is the trough in December of 2018, which is a position for that 9-year cycle trough that I discussed in the most recent market update about the S&P 500. But now let's play devil's advocate. Are we convinced about the position of that 9-year cycle trough? Let's look at the previous one. Here is a previous 9-year cycle trough over here in 1998. Look at that strong bullish move through the 90s that led us up to that 9-year cycle trough. That's a fairly questionable position, I'm sure you will agree, for the 9-year cycle trough. Let's consider the next shorter cycle, the 54-month cycle, which you can see we have a trough of over here in 2002. Then we have this rather difficult position for a cycle trough over here at the beginning of 2014. Where is that 54-month cycle trough? That is a really big question mark. Of course, it might be positioned over here. Perhaps that is the 54-month cycle trough. But then that raises many other issues in this analysis, because an analysis, as I've mentioned already in today's video, is a complex puzzle involving the placement of multiple cycle troughs. If you move one cycle trough, you have to consider the implications of moving the other cycle troughs as well. Let's consider for a moment the possibility that the trough that formed in October of last year, which we've been discussing as a 54-month cycle trough, the possibility that that could be a 9-year cycle trough. What would that mean for this analysis? Fortunately, when moving a longer cycle, we simply hop every one of these cycle troughs over by one 54-month cycle. And so our new 54-month cycle troughs would then be positioned over here where the current 54-month cycle troughs are. Let me circle them in the price action. Here is then a potential 9-year cycle trough. Here is a very worrying and confusing 9-year cycle trough. And here is the third potential cycle trough, our recent trough in October of last year. So let's consider this picture and compare it to the analysis that we are looking at in terms of the diamonds that are actually on the chart. First of all, what about this cycle trough over here? Does this make sense as a 9-year cycle trough? It absolutely does. We had a good, clean trough forming at that time in the price action. So I have no problems with that. What about the fact that this trough over here in 2009 then becomes a trough of the 54-month cycle? Well, we could debate that, and one side of the argument would suggest that the financial crisis that occurred in 2008 caused a form of fundamental interaction, where news events resulted in the cycle influence being stretched and exaggerated, and therefore price fell lower than perhaps the cycles were influencing it to do. And so the only reason that we had a deeper and more impressive trough was because of that fundamental interaction. I've explained this reasoning when discussing the pandemic trough of 2020, where I believe a similar thing occurred. So it is possible that that is what occurred as a result of the financial crisis of 2008, and therefore this is possibly a reasonable position for the 54-month cycle trough as opposed to a 9-year cycle trough. What about this trough in 2014? That is an anomaly that is not resolved one way or the other by calling that trough a 54-month cycle trough or a 9-year cycle trough. The only way in which we could resolve that anomaly is by suggesting that the trough that occurred in March was of a much longer cycle. 18 years, 36 years, 54 years. Who knows, but a much longer cycle trough potentially formed in 2009, and therefore the shorter cycle troughs of 54 months or perhaps even 9 years had the moves down into their troughs suppressed by those longer cycles, something I've already mentioned in today's video. The next implication of moving the 9-year cycle trough positions would mean that the December 2018 trough was a trough of only 54-month magnitude, and there is no anomaly there. It could be a good 54-month cycle trough. The point that I'm trying to make is that I can argue both sides of the position of this 9-year cycle. I could argue vehemently in support of the analysis that we see on our chart at the moment, with the 9-year cycle troughs where you see them. I can also argue a fairly convincing position that the 9-year cycle in fact should be displaced by 54 months to the right. And this is what I mean when I don't place too much emphasis on the position of those longer cycle troughs. Of course, a long cycle trough position is very important, but we can spend a lot of time debating both sides of the argument and not actually reach a conclusion. I continue to believe that the best analysis does position the 9-year cycle trough over here in March of 2009 and then in 2018. And that means bringing this whole discussion to a conclusion that the trough that formed in October of last year was probably, in my opinion, the 54-month cycle trough that we see on our charts, indicating that the FLD, as I've mentioned, the 18-month FLD, is likely to provide us with an acceleration point as opposed to a support level. But as I hope this discussion has encouraged you to do, I think it is important to bear in mind the possibility, and it's only a possibility at the moment, the possibility that this could have been a greater magnitude cycle trough, and therefore we should be aware of the fact that this 18-month cycle FLD displayed on the chart could in fact provide support as opposed to an acceleration point downwards. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Discord channel. I look forward to hearing from you.